Here come the drums. All right, good morning. Never mad at the fact he's corrupt like a senator. All right, hey, yeah, all right, so I got to move this here, I got to move that there. And we will mark this as the beginning. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Thumbnail. All right, got that done. Sweet. All right. So, hey, boy, it's the day one of the FOMC meeting. Yeah, it's a big deal. Yeah, day one. So tomorrow we will get an interest rate decision here in the United States of America. But today, that's not the big news. Today, Microsoft and Alphabet report after the close. Oy vey, two of the Magnificent Seven reporting. So we are going to have some vol today. We're going to have some vol tomorrow. Thank you, Eric. Go ahead, girl. Go ahead. Get down. So anywho, yeah. It's going to be a very interesting couple of days. Of course, Friday is non-farm payrolls. That's going to be a market mover. Well, not really, because we're now, you see, here's the thing. What's going on today and tomorrow is the Fed meeting, but we're not talking about this Fed meeting. We already know this Fed meeting. We've already done it. So now, and amateur traders miss all of this, right? They're like, oh, if the Fed doesn't cut, then it's going to be a surprise and blah, blah, blah. No. Institutional investors are already on the next Fed meeting. So today, tomorrow, and even non-farm payrolls coming out for February is all related to the March meeting and even June. But nobody cares about the January. We're already done Wednesdays, meaning it's all been priced in weeks ago. So, but a newer trader just thinks tomorrow is the big event. No. Tomorrow is about the March meeting. Will the Fed cut in March or not? Therefore, January is done. It's dead. It's dusted. It's already in the books. 90-something% chance that the Fed does not does not cut. It's good to know, huh? Now, if any of you don't know how to figure that out, let me know and I'll show you. It's a quickie. I can show you how to do the calculations, because I remember when I first started trading, the market would say, oh, it's already priced in. I'm like, what does that mean? I can show you what it means. All right, cool. Hey, you're a trader. You probably need a broker. You can go to tradersway.com, open up a demo, see if they can earn your loyalty and respect. You'll see their platform is clean and organized and very nice. Great, cool. But they're an ECN, and you probably want an ECN because ECNs don't trade against you. That's right. ECNs don't trade against you. So if you want a broker that provides you services, use tradersway.com. If you would rather have a broker that trades against you and makes money when you lose, go find somebody else. But if you want an ethical business partner, consider Traders Way. They earn my loyalty and respect. Maybe they will earn your loyalty and respect. So today is a Tuesday, which means the swing trading group and day trading group, which are the live groups at Investor Bootcamp, we meet today for something called the Week on the Street, and we will download and actually read economic reports from major central banks around the world. And you'll get my insight to what does all the fancy economic data mean as a trader and an investor. I'll teach you how to read between the lines. Now, to get an example of what we typically do, I post them and email them to you after the event is done. So we can go back to January 16th. And so we looked at Swissy CPI, European retail sales, Japanese inflation, Australian retail sales, Australian CPI, Chinese CPI, US dollar PPI. That's pretty cool, right? And then, of course, I provide the links directly to the reports. Now, there's only usually typical 8 links, 9 links. So you're like, it's not a lot of links. Yeah, well, I spend 1 to 2 hours reading them out loud and discussing their meaning with you. This is the work that you're supposed to be doing if you're a serious trader. Look, if you want to be amateur and mediocre, by all means. But this is the next level. Even if you don't understand it, that's the whole point. You don't understand it, you should join the group. So that's going down today. Last week, we did British employment, Canadian CPI, Chinese GDP, industrial production and retail sales. We looked at British inflation. We looked at US retail sales. We looked at Aussie jobs. We looked at British retail sales. We looked at UMich, University of Michigan Consumer Sentiment. In particular, the survey's analysis of expectations of inflation in the future. So you got to know how to read the reports and what it means. And so that's what we do. And so UMich is right here. Ta-da. Cool. Anyways, that's how we do. And I invite you to check out Quantbox. Yeah. So like Quantbox, for example, this page right here, when you log in, it says there's no intrinsic trend. And if you trade, you should be extremely careful because there's no underlying trend. So there's a bit of randomness to it. And you probably should stay away from dollar pairs and focus more on cross pairs. And you can figure that out looking at 3 time frames on 6 asset classes and do that type of analysis, aligning your trading aggression with actual market conditions, and it takes you 3 seconds. Once again, if you ever wonder why you go through periods of trading very well and you're very profitable, and then just out of the blue, it all goes away, well, that's why. You're trend trading in a range market, or you're range trading in a trend market. Well, how do you know which one it's doing? Quantbox.co. Okay, pound coming down, yen coming down. Let's give this a little more time. I'm zoomed in a little bit. Okay, sideways. Interesting, if this comes down, that's a bit of risk on. Aussie giving back a little bit today. Now, the big movers are probably going to be the stock market, but I wasn't expecting until later today. So the market's not open right now. But they are hesitating at highs. I bought the NASDAQ yesterday at the weekly central pivot. We call that a swing. My stop is now at break even. So if I can survive today and tomorrow, yeah, great. But technically, this is what it shows. But psychologically, yeah, dude, this is very, very toppish, extreme tops. Now, when you look at the S&P 500, this is a combination of the weekly and monthly target. You think I should be cautious? Let me think about it. Yes. Good morning, Maida. Okay. Next little potential buy zone is down here at 49. Dow's got some room. But notice our current price, if you were a bear, okay? If you were a bear, if you are a bear, it doesn't make you a bear, but if you're already a bear, if you saw this, let's say a move like this down to the 21, double top, and then it fails because of, let's say, the Fed not cutting interest rates, what this says is Dow is coming down to 3,700. Oh, God, as Kanye would say. Not Conway Titty. Titty, sorry, Twitty. Yeah. Anywho, Freudian slip. So we'll see. We'll see. It's going to be a very interesting couple of days. I'm telling you. By the way, you guys want to meet up? You guys want to meet up and do the Fed meeting together? I think I'm available. Pretty sure I am. I think what I would do is do the registration at Quantbox. Yeah, all right. Disorder, disorder, disorder. Ah. Take a look at indices on the longer time frame. Yen is generally weak. Okay. Dollars generally strong. Swissy generally strong. How about the pig? What? The sterling? Yeah. Well, kind of on the high side, huh? What do you think? Aussie climbing. Ugh. Do you think that is related to the stimulus? Yeah, plausibly. Huh? Creeping up the lower bound. Could be interesting if that's Chinese stimulus. Then Kiwi should do the same. And it's breached its down channel. So I guess at some point we'll have to recognize the up channel. What do you think? Smell like a plan? Now that's technically, and those are baskets, that's one component of trade planning. Quantbox still has this very bearish and bearish, but remember, it's not thinking about in the future that China may stimulate their economy, and if they do, it may create demand for New Zealand or Australian products, and in that case, there would be an increase in demand for those currencies. Well, that's not what it does. So it does tell you the relative differences between the two economies right now. There's a difference. Okay. Anywho, so how's that euro? It's had a tough time and it's on support. And we're at that point where euro recovers. And today we had that good GDP number. And I discussed that at Quantbox this morning. And if this fails, technically that would be very interesting. Okay. But surprisingly good GDP. Maybe we travel along that lower bounds. Sure, Frank, that's very common, right? But nonetheless, there was good GDP. Okay, I'd like to point out, though, too, that Quantbox said this is the time the dollar usually gets strong. And I think now that we've gone 30 days, we can confirm that Quantbox was correct. Sweet. $79 a month, get you set straight, boy. Like, Wayne, I love it, but I don't have $79 a month. Well, you got no money, you got no car, you got no woman, and there you are. I think that was Confucius who said that. Now, you guys remember that song? He's singing about going to the movies. You spot a fine woman sitting in your row. She's dressed in yellow. She says, hello, come sit next to me, you fine fellow. You run over there without a second to lose. And what comes next? You bust a move. Hey, man, the 90s were awesome. I'm telling you. 90s were awesome. You could listen to hip hop and jazz, and then you could just listen to hip hop. And then you could listen to hip hop and heavy metal, and then not just hip hop but more rap. So like one of the things I loved was like rap hip hop mixed. Oh my goodness. Everything is so separated now. Back then it was great. You can mix all kinds of music. 80s, 70s, and 60s were probably pretty good too, I imagine. I mean, the 80s were just like, let's be completely different. Synthesizers and stuff like that, you know, like just radically, let's change everything. And the 80s, like true 80s music, really has its own vibe. Yeah, the 80s were cool, 70s, the 60s. Yeah, that's the cool thing. Like, the 60s, right? Like you have to think of, you know, from the American point of view, you have to think about the Vietnam War and, you know, and that kind of stuff. And yeah, the Beatles, but even like the Rolling Stones, right? So I'm going to head out to Morocco in a few weeks and I'm thinking about going to Cafe Bubba. That's where the Rolling Stones used to hang out. In Tangier. So I'm like, oh, I got to go have a coffee. Cafe Bubba? Yeah, why not? I'm not going to smoke hash though. You know, I'll be with my family. So, no hash for you. Hey kids, let's go smoke hash at Cafe Bubba. Yeah. Yeah. But they say a lot of people have written books about the time, but like the Rolling Stones were like world famous, right? And the loss of all personal privacy and all that kind of stuff. So, it's hard to be a rock star. So, anyways, they're in Morocco doing something, visiting somebody, and nobody knows these guys. I guess the Arabic countries didn't listen to British and American rock and roll music. So they found themselves in Morocco and like nobody cared. And to get your anonymity back is amazing, huh? So, anyways, there's a cafe. I don't even know. I haven't even looked this place up. I don't even. Okay, Cafe Baba. Not the one in Chicago. No. Cafe Baba Tangier. Yeah, in the Medina. Cafe Baba. TripAdvisor, I guess so. Yeah, that'd be it. Where's this one on Vice? Wow, look at all the ads. Crazy amount of ads. There we go. Yeah, that'd be it. Some movie starlet lived across the street and they would hang out at Cafe Baba and then go party with her at her apartment. And I don't remember who it was. Yeah, I'm pretty sure that's Hash. Keith Richards. Anyways. Oh, yeah, now you can just play games. Yeah, whatever. Yeah, that sounds like a good thing to do. Anyways. H. I used to walk down like Haight Ashbury in San Francisco, and people would walk by me, and you're walking in opposite directions down the sidewalk, and you hear this H. I'm like, I asked my buddy, like, what are they whispering to me every time we go by? And they're like, H. I'm like, H. And they're like, they're offering you hash. They want to sell you some hash. I'm like, really? And I look back. Really? I'm not in the market for hash, but how much is it? Is it good hash? I want to know what's so good about this hash. But that wouldn't be a typical Wayne thing. H. Oh, it might have been heroin. Sorry. I guess it would have been heroin. Huh? Sorry, my bad. See? That's how little drugs I've done. Yeah, sorry. It wouldn't be hash, it'd be heroin. Can you imagine? You're like, well, I don't really do drugs, but let me try that heroin. Gee whiz. Be a rough start, huh? All right, so waiting for oil to recover, my WTI. So we're at 76. Will it hold? Oh no. Will it hold? Yeah, we'll find out. Just these markets are so cray cray. Drop into a smaller time frame. I have an X there. You're welcome, by the way. You're like, what's the X? I'm pretty sure it was yesterday's target. So now we're on today, and traders are trying to figure out what to do. And you're like, well, we already did it. So the plan yesterday was wait for people that don't plan their trades in advance to show up, and then we will sell them our positions for a profit. We'll buy low, and they can buy high. It's a fair trade. Those who plan and those who don't plan. It's fair. Don't be mad at me. So going out to the 4H now, will we have an op? Will we? Yeah, will we? Yeah, good question. By the way, if we go back to the early part of Jan, and we're, let's say, January 4th, our target, you see it's labeled 4909.2 is the conservative target. How'd we do, generally speaking? Pretty good, right? Well, not bad. The idea is simplicity. This is something I've been focusing a lot in the day trading group. I've been focusing a lot on simplicity. Okay, you might have complexity in your fundamental macro analysis, and then you make a decision. You know what the secret to Forex is? Does anybody know? I've covered it a couple of times. I even played a movie recently. I also quote multiple different books from multiple cultures, from multiple types of history. Humanity has known this for a very long time. No, keep it simple, not really. It's even more simple than that. Okay? The secret to Forex, the secret to being a samurai, the secret to life according to a true cowboy. You can go like, right? You can go through all kinds of examples throughout history. The one thing, that's exactly correct. Lucas nailed it. Yeah, please don't, Greg. Please don't. Yeah. Wait for tomorrow afternoon. The secret to Forex is just one thing. Does anybody know what the one thing is? Now, the facetious answer is, well, that's for you to figure out. It's true, but what are you trying to figure out? Now, using the samurai, to know that one thing is the same as knowing 10,000 things. If you know the one thing, then you know 10,000 things. But if you start the other way around, knowing 10,000 things may not necessarily lead you to the one thing. So you have to start with the one thing. And it's, are you a buyer or are you a seller? Now think of how that decision fundamentally or whatever leads to technical analysis. What most amateur traders do is they want the technical analysis to tell them the one thing. Of course, that's 100% the wrong way of doing it. So what they do is they try 10,000 different ways to trade Forex. They try 10,000 different gurus. They try 10,000 different indicators. And they can never find the one thing. But let me tell you, a level of clarity appears when you've decided you want to sell the S&P 500. Okay. I don't know how you got to that decision, and I'm not here to tell you you are right or wrong because I don't know the future. But you've made your decision. You either made it through hardcore, crazy, deep analysis, or you flipped a coin. It doesn't even matter. That's the power of the one thing. It doesn't even matter if you flipped a coin. Oh, I guess you're a bear now in the S&P 500. Great. All right. So is this a sell right now? No. So in 4 hours, you can ask again, is it a sell now? No. 4 hours goes by again. 12 hours, 16 hours, 20 hours, 24 hours. Is it a sell now? Well, maybe things will technically change. But now it's just like sell or do not sell. Well, what if it moves sideways? Well, then you'd be neutral and you wouldn't be a bear, but you're a bear. So being a bear removes 2/3 of all your choices. And now you're down to 1/3 of your choices. And it either is, because that's the thing about technical analysis, it's either a bearish setup or it's not a bearish setup. Now, how does one thing lead to 10,000 things? Well, now there's 10,000 different ways you can trade, and they'll all work if you use your technical analysis to filter out the non-bearish setups. Great, that'll work. But the thing is, if the S&P 500 is coming down, the Dow will come down, the NASDAQ will come down. The dollar will go up, the euro will go down, the Aussie will go down, the Kiwi will go down, oil will go down, gold will go down, silver will go down, platinum will go down, palladium will go down. The pound yen will go down, the euro yen will go down. In a blaze of glory. Yeah. You see, all of a sudden now I have 10,000 setups. And then I can confirm and deny that with whatever technical analysis I choose on whatever time frame I choose, because they're all correct. It's just time and price. So now I use my time and price data, and I can use RSI, I can use MACD, I can use stochastics, I can use CCI. It doesn't matter anymore. You see, now because of the one thing, I know 10,000 things. It doesn't even matter. It's either a lower high or it ain't. Do I sell higher highs? No. Do I sell double tops? I could. Can I sell triple tops? I might. Do I sell lower highs? Every time. So now, because of the one thing, I use whatever indicators, whatever moving averages. I can add more layers. I can remove more layers. I can use any tool I want because I've mastered everything by not just by skill and experience, but by removing 66% of the possibilities. Now there's a very simple subset. It's either a lower high or it's not. I could use Fibonacci. I can use daily pivots. I can use weekly pivots. I can use monthly pivots. I can, I could use Elliott Wave. It's all unlimited. You could use pure price action. I could have absolutely naked charts. I could do it because of the one thing. You know what Quantbox says the one thing is right now? That's just one way to get to the answer. You're like, Wayne, well, I don't understand complex macroeconomics and global macro flows and cash flows around the world. I don't understand sort of institutional stock of capital and flows of capital. Like all of that I know is important, but I just don't understand it. Plus to get it on multiple time frames and then correlate that to the proper assets. Wayne, I know it's there, but I don't know how to do it. Well, Quantbox will just tell you. It'll flip the coin for you. It isn't necessarily right. Okay? Even artificial intelligence doesn't predict the future, but it can do unbelievable amounts of work and give you the output. There are things that used to take me 4 hours that now take 4 seconds. And I'm not even joking about that. So Quantbox can help you make that decision. And let's say it tells you to be a bear. Well, then now you only look for bearish setups. What if it tells you to be a bull? Remember, it's analyzing multiple things on multiple time frames and doing comparative analysis and doing all this crazy detailed work. And then it says, oh, well, maybe you should consider being bullish. So you're like, I guess I'm going to be a bull now. And so then you look, and now you only look for bullish setups, and you may not find them because, well, there's long-term and short-term moves, and, well, you'll sit around not trading for a while until it becomes bullish, and then you'll set that up. But right now, Quantbox tells you there is no trend. The one thing is zero. The one thing is nothing. Do you understand how important it is to know that the one thing is nothing? So Greg's talking about puts and calls. You know what? I'm thinking about adding that to Quantbox. Just a little indicator that, every day, basically, because, you don't have to start this 24 hours a day. But let's say once or twice a day you log in. Wouldn't it be cool to just have a little indicator that just shows you the put call ratio? And based on analyzing the options market, what is how does the options market feel about the stock market, for example? And you might find that it's worried. It's it's the option market is setting itself up as if the stock market's going to fall. Would you like to know that? I have a working demo. I can't show it to you, but let me see. Probably take me a long time because I got to get into the test database. Can I do all this? I have to change to the different account. Hang on, I'm off screen logging into a test account, and the demo says 0.94. Okay. So the put call ratio is calculated as put volume over a determined time period divided by the call volume over the same time period. The higher the value, the more bearish it is. The lower the value, the more bullish it is. And it's negative, but basically neutral. So it's neutral. Okay, Greg, it's slightly bullish, but basically we could say neutral. So like neutral is 1, right? So you look at all the calls. It's puts though, isn't it? Okay. Okay, so you look at all the puts. It's the puts over the calls. Okay. And 1, if that equals 1, so 1 over 1 is neutral. And we're at 0.94. So pretty close to 1, right? So it's a little bit bullish, but like by 0.06, like it's not that bullish. So we'll call it neutral, huh? How many people would like to look at that number, let's say once a day, if it was presented to you on Quantbox, you could just look at it and go, oh, that's where we are, as another sentiment gauge. Okay. We could probably add it to a risk gauge too, I suppose. Anything, right? Everything, let's say below 0.80 would be bullish, and anything over 1.10, I guess it would be 2, right? 1.20 would be bearish. And we can add it as the 7th thing that we look at in our gauge. How do you join the swing and daily groups? investorbootcamp.com. You join, it's $88 a year. You get 100 hours of training, and then you upgrade your account. Swing trading does a lot of sort of fundamental and technical work, sometimes group work. And you learn a lot about analysis. And then the day trading group meets, every day, Sunday through Friday, Sunday through Thursday. And they attend swing trading as well. So daily includes swing. Fooling. Ow. All right, so I already got this set up. So I drop in here, and we have this going to 49.000. My, actually a little higher than that, 49.09, 49.10. Okay. Okay. So it can go down a little lower. And around that price, okay, I am going to look. Okay. By the way, nobody responded to the question about the put-call ratio, so nobody cares? You don't want to know how the options market is positioned for the stock market? Ravi, Quantbox does do the VIX. Yeah. So anyways, guys, I would suspect this way. And then my job is to analyze whether it changes. And if it changes, I go long. Frankie's in. All right. All right. Good. I mean, we can take a look at Quantbox quickly. I'll show you where you can look up VIX. Now, usually VIX is part of other analytical analysis. I know that was a double whatever. You don't generally just look at VIX. It's incorporated into other models. It's part of some of the models. But it is accounted for. And VIX being volatility. So I'll let you know my thoughts. You see this? I don't think you guys are using this. So I'm thinking about putting the put-call ratio here. Okay. Anywho, so VIX. Now VIX is part of this calculation. And this. Okay. This is part of your one thing analysis. If you can't make a decision on the one thing, then this is going to make the decision for you. We're looking at 3 different time frames, daily, weekly, and monthly, and there is no one thing. The one thing is nothing. Bullish or bearish? Nothing. Bullish or bearish? None. Bullish or bearish? None. Now, to get to this, we do look at the yield on the 10-year T-note. Daily, weekly, monthly. Okay, yields are up 5% over the last 30 days. That's bad. Okay, we look at the dollar index daily, weekly, and monthly. Dollar index is up 2% over the last 30 days. That's also bad. Okay, the yen is down over the last 30 days. That's good. Gold down, well, gold flat over the last 30 days. You guys trading gold, huh? Whatever. Could have told you that. Well, I did tell you that every single day. You're trading the wrong thing. Anyways, right? Quantbox sees that. That's neither here nor there. That's a zero. S&P 500 is up 3.25% over the last 30 days. That's good. VIX up for the day, way up for the week, way up for the month. High volatility is bad. Bad and bad on that time frame, and well, it hasn't opened yet, right? So anyway, so you go, so you add it up. Should you be a bull or a bear? -1 plus 1 is 0, plus 0 is 0, plus 1 is 1, minus 1 is 0, minus 1 is minus 1. So there's no intrinsic trend. Now, maybe I could add a put call, a PCR, a put call ratio here, and have it one more. So you could look at this, and if we did a PCR, it's 0. So it would still be, okay? It'd be out of 1, 2, 3, 4, 5, 6, 7. It'd be a -1 instead of out of 6. So maybe I'll look into that. I'll update these. But right now I got other crapola, as they say, that we're working on. That is, taking a lot of engineering time. But maybe I can squeeze that one in there anyways. Yeah. Okay. Neat, right? Bitcoin just cray today. Let's get rid of it. Yeah. Now, a couple of these have moved up. That's what we talked about this morning. That's what we talked about 2.5 hours ago. There were things down here that we figured would move up. Looks like they're happening. Interesting. Noise. Kiwi went from weak to strong, probably off of that China data, huh? So the markets haven't opened yet, so that's why this is just, well, it's 0. Nothing's happened. So if this turns bullish, so you go to the green, it'll tell you what assets to consider buying and what assets you would consider selling. So like you might look at like for example, it could say, okay, risk on. So therefore, so if risk on, then you could consider, like, you would buy a pound, so you'd be bullish on the pound, and you might be bearish on the yen or bearish on the dollar. Okay, that kind of thing. Bearish on the Swiss franc. Like, you just need to know these things. And then, so how do I make that determination? Well, it actually tells you on the risk gauge page. So it's all predetermined based on correlation. It's pretty, huh? So good movement here. Very happy with that. Yeah, oil's taking a nosedive. Oh my gosh, yeah. We started Sunday at the open. It opened at 79. So we've dropped $3 in a day and a half. Well, I guess 2 days because, the market opened Sunday. Yeah. So we'll see what's going to happen today. It's very interesting. I think you're going to see a lot of volatility. Remember, volatility is bad. So, like I've already explained, explain me, Lucy. All right, well, I've identified this area as a possible up. So now I sit and wait for a confirmation of up. So I'm going to hurry up and wait. I know what I want to do for Ravi. Where'd it go? I know what I got lost. All right. I wanted to look at things like seasonality. I think I got some VIXY on this. Okay, see? Okay, and you can break it down if it's loading. Do I have the weekly? I might not have the weekly data. Yeah, that's interesting. Yeah, I guess I don't have the weekly data. For VIX, oh, it's still loading, maybe. It's calculating. Yeah, okay, good. It does. All right, so here we go. This is the VIX week by week by week. Week of the year. This is the week 5. 1, 2, 3, 4, 5. This week has high volatility. Oh, I just gotta know. Hey, Candu, can I please email me? Why would you do it? What is it you need? So, anyways, notice this, guys. This week is a high vol week, and then we drop to normal levels and then unusually low levels of volatility. Okay. So what I've done is you go back and look at the VIX over 10 years. And then you look at the variance. Meaning, okay, there's an average, but then how low are the lows? So you got to look at all these lows and how highs are the highs. Okay, these are all highs, right? So how low are the lows and how high are the highs relative to the average low and high? You get it? And then you can look at, so then you take the variance and you get one standard deviation, which is 68% of the price. But then if you do the calculations further and you do two standard deviations, that represents 95%. So now we're looking at the top 5 weeks over 52 weeks, or I should say the weeks that over 10 years are in the top or bottom 5% quartile. They're extremely unusual. They're extremely abnormal. And we're in one of those weeks where this is a crazy week. Okay? Look at the volatility early in the year. Unusually high to unusually low to unusually high, all the way back down. Now it takes another month or something, and here. Okay? Here. And often what you'll see is, not always, but this is like, I don't know, just, let's just put it that way. Not outside of 95% expected price action. Now, the analysis of VIX is actually related to options. So, options on the S&P 500. So, according to this week, over the last 10 years, this week has a lot of purchasing of S&P 500 options. What's going on? Help me understand this. Don't worry about the number. Tell me about the human. Why is there suddenly a giant, unusually large, giant spike in the purchase of options on the S&P 500? Can you give me? I'll accept two answers. Fed meeting, yes. Earnings season. You guys nailed it. That's it. 1 and 2. Yeah, absolutely correct. Good job. Absolutely, totally correct. It's nice to be able to see it, though, right? So, is it possible? Okay, is it possible in this time of year you buy the VIX? And this week you take profit? Oh, it's possible. I suppose so, huh? What do you guys think? Is this good intel? Now, this is the accumulation, meaning, okay, that by the time we get to week 5, yes, there's a decline week 6 and week 7, but there's still more. And then, so when you're down here, it's still a higher high, right? Sorry, it's a higher low followed by a higher high. So the year looks like this if you were to overlap them. Cool. Okay. Is VIX up good or is VIX up bad? Well, if you're clever, ooh, look, they're ticking over a little bit. Well, let's look. VIX up 9% for the week, bad. VIX up 9.5% for the month, bad. VIX up is bad. But do you understand? This was all quote unquote predicted to happen. We already knew this to be probably true. The probability of VIX going up this time of year is quite high. And next week, the probability of VIX falling. So this drops to, let's say, 6.5. Is that probable? Yes, that is probable. Oh my God. Oh my God. Oh, anybody having an aha moment? Huh? Bloomberg Terminal is $2,200 a month. Quantbox is $79. And we have that kind of data on every major asset class in the world? Like, oh my God, can you do that for the DAX? Yes. You're welcome. Oh, I just gotta know. We got about 24 minutes to the open of the stock market. Let's take a look at a couple of other things. I need up on the oil. Come on, the oil. Come on, the oil. Okay. We'll see if she can climb. Now, it's lower than I would have preferred. That's for sure. Okay. Well, so whatever. We'll see. Yesterday's conversation had to do with setting up a crown pattern. Okay? A crown pattern on Bitcoin. If you missed that conversation, then check out yesterday's video. Up, down, up, lower, low, lower, high, lower, low. Because then, you're like, it'll put all of this into context. We just had a monster day, bullish monster day on Bitcoin. It might be over, but we talked about it yesterday. Hang on, I'm going to sneeze again. Can you imagine? Wow, what's going on, Wayne? I don't know. Wow, such a busy week this week for trading, for a bunch of things. I'm working on another AI that only does technical analysis. And I'm sort of testing it, if you will. The problem with the AI, I guess, like you guys have probably tried tradeplans.ai. It generally gives the same feedback that I would give, or at least the same outcome. I guess that's more likely. Because I wasn't able to teach it to think the way I do because, it can't think the way I do. But I trained it to get the outcome that I would generally agree with. So I had to teach it to trade. The other way to approach it is let it make decisions technically. And the interesting thing about the technical analysis AI, which might become, if not almost certainly will become, a service that you guys will be able to subscribe to. Right, Richard's saying AI is more statistical. Well, Richard, this AI does recognize patterns, but what I'm trying to get to is it makes decisions that I wouldn't necessarily make. So it's kind of hard for me because I have to decide how much do I. Oh man, I got to cancel that. Sorry, I just got an email. No, I got an invoice. It makes decisions that are, let's say, intraday and scalping. And like I do it, but that I don't do that type of analysis. And it's interesting, like, do I have the strength and confidence to build something that would disagree with me? And honestly, I don't know how I feel about it. Now, the one thing that AI can do way better than me is look at not just the pattern, but it remembers every time it's seen that pattern on this asset. And I think you guys would agree that that's pretty powerful. So Richard says it's based on returns. No, not always. No. No. It is very pattern based and it's statistical, but like, for example, in a trend. So I'm looking at the AI. I can't show you. It sees basically my price action pivot points on gold. So I'm comparing it. Now it's looking at that same trend on a 15-minute chart. So we'll go here. So it's looking at this. And it goes back further. So let's try to match these up a little bit. Price action pivot points, 55. Let's do 233. My other choice was 144. Because you guys know your golden ratio, right? 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 366. Got to know it. So anyways, let's pop this down. Takes a bit because the indicator actually has to do the math. So the problem, well, I don't know if it's a problem. Technical analysis doesn't pay attention to the future, and today is kind of a very interesting day, and tomorrow is a very interesting day. But the AI is recognizing that this is an uptrend, and see, it thinks differently than me, and so it's a hard one to get used to because it sees this as a bottom, and it sees this as a top, it sees this as a bottom, sees this as a top, okay, and then sees this as a top. Now, what would Wayne do? Wayne would filter this and say, I'm a bull. And so I would use the channel and all the other tools available to me, one of which we know this is actually a buy price. Now, this is set up bearishly, but let me show you. In an uptrend, you would want this to be bullish. So bias pivots, you would have this bullish. This is bearish from previous analysis. Okay, so let's set this up as a bull. So I wouldn't necessarily trade the channel as a channel. I would trade it as the channel represents an uptrend. And like, is this a buying price? This whole zone, whether it's the bottom part of the channel or this, I only have two prices that I could buy. This price and this price. At some point throughout the day, the probability is that we'll hit one of those prices. And I long. Okay, that's how I trade. Now remember, good, bad, and the ugly, that's how I've taught myself to trade. The AI doesn't think that way, and it says, well, it's seen this many times. And in fact, I could go into the database, and I know it reports it to me somewhere in the database, how many times it's seen that pattern before. It's part of the conclusion. So it thought, there we go. It thought a drop to 2027 in the next 13 hours would have been probable. 1327. So back to here, but that's actually what it says. And that's not how I would trade if I were me. But that's how AI would trade. Now, when I get, so I'm the human, and I teach my point of view. And so hopefully you can disagree with the AI and not just say, AI, make all my investment decisions for me. Well, that's silly, I think. But at least you can learn that this is how it looks at the market, where it's, statistically, it's saying these are good trading habits. And that is not wrong. That's that. It's quite statistical, as you'd say, but it's also a pattern. What I've found for me over my 20 years of trading this, that I've done better in situations where I've made a decision to be bullish, or I recognize a higher high, higher low, and I filter out all the sells. So I don't sell there, but I could take profit. I don't sell there, but I could take profit. I don't sell here, but I could take profit. I don't sell here, but I could take profit. But I can buy here. I can buy here, and I can buy here. You see these prices here? So I could say this is an uptrend. So on Monday, I could, if I wanted to be a bull, buy. Okay. So the day trading group meets around this time. And so what we would say, if you're a bull on gold, this would be your first opportunity. Your second opportunity would be lower. Okay. So you could have a situation where you buy the dip, you put a stop down here, and off she goes. And now it makes a higher high. So now at the London Open, you would look left, drag this across. Somewhere in there you want to buy. Your second trade would be this way. Go there. As soon as it makes a higher high above this high, you move that stop to here. You move the first stop to here. So one is at break even, one is in profit, and you let it run. Different than the AI. But I think that's okay, because I can't remember every time I've seen that. So as a human, I have general rules. In artificial intelligence, you're essentially looking at probabilities. It does remember every time it sees it. And it'll say, well, 60% of the time it works every time. Lucas, no, I can't do that, but I know what you're saying, and that is good. I can't do that. No. No, I can't. But one of the things that might be able to be done is say, only show me patterns with greater than 70% probability. Meaning, in the past, 70% of the time, the pattern fulfilled one particular outcome. 30% of the time, there was some other outcome. It's also very good at saying, hey, today we have the JOLTS report. What it remembers the outcome of every JOLTS report going back, I don't know, a certain amount of time, let's say 3 years. Every JOLTS report it remembers. It also remembers, was it greater than expected or less than expected? And also know what the euro dollar did in the period 2 hours after, but what the pound dollar did 2 hours after, USD yen 2 hours after, pound Swissy 2 hours after, DAX, gold, silver, S&P 500, Dow, VIX, that kind of stuff. It knows what everything did in the 2 hour period after JOLTS, and then particularly when JOLTS was greater than expected or worse than expected, what actually happened. And all of a sudden, that is so much massive information, a human could never do it. And it could look at it and say, JOLTS isn't actually that big of a deal, don't worry about it. Oh, cool. But it might say tomorrow's ADP is important, or tomorrow's FOMC is important, and how important. And it would explain it to you in great detail. Oh, really? Yeah, that could be interesting because I've been doing this for 20 years, so I have what I consider to be the truth of what happens, but of course, my truth is biased. I remember what I remember, and some of it's emotional, and some of it's incorrect, but it's how I remember it. And of course, using AI, well, it's unbiased completely, and it can't think forward, but it doesn't filter the facts. But I like both. So notice this is a buy zone. This is the take profit place. This is the buy zone, and I've labeled it for you. $2,000, right? $2,047.72 is the aggressive bullish profit zone. So what would a human do if the human happened to be Wayne McDonald? All right, well, I would then pay attention to these new prices around here. Oops, I wanted that to be black. Okay. And then we probably want to do some statistical analysis. So let's do a linear progression at 1 standard deviation, which is 68% of price action. And we'll do a linear progression on 1 standard deviation this way. We'll see that it's above 1 standard deviation, so we should then do the top side of 2 standard deviations. And we might say tomorrow looks like this. If this holds, but you can see we don't know. Like that. And it's trying to do something similar to pivots. But, they're all different versions of the different maths to get you to the same outcome. Okay. Neat, right? Man versus machine. Don't ever think that because it's AI that it's smarter than you. I think you will become doomed if you believe it. These are tools to help you make decisions. You are the boss, and you need to hang on to that very closely. I'm trying to find a trade plan that it did. I'm trying to find the time it came up. 129 at 1900. Gee whiz. Europeans, huh? All right. What the hell is 1900? Is that 7 o'clock last night? On the 29th. Is that 7 o'clock last night? I guess so. Okay. At 7 o'clock last night, the AI for gold said 79% chance of gold going from 126, which is here. So last night, so in here. So right, 7 o'clock. Yeah, so around here. And it was coming up from 2010. Yeah, so after this move, this is what it said. This move little here, this little cross here. It said at 126.19, 2026.19. Very specific. At 1900, okay, yesterday, it said 79% chance, based on this pattern, that we would get to 2043.55. 2043.55. Now, the way I teach is way different. So I'll do mine in blue. I can't do statistics, but I can tell you from this price, 2029, and I can get you 2029.42, okay, to 2043.72 to 2047.72. So by and large, it agreed with the conservative plan. That's my aggressive plan. But the nice thing is it said it last night. Of course, we do this in the day trading group. Okay. And, but it has the probability, which of course, I didn't know. And well, that one was right. Will they always be right? Well, they'll always be right in the sense that it statistically knows, it accurately knows the statistics, but you can lose money on something that has worked 79% of the time in the past. Doesn't mean it'll work in the future, does it? But I would have made the same decision there. I mean, that's just an easy swing trade. We do this all day, every day. But it's nice to know maybe that 79% gives you the extra level of confidence you need. Or maybe it says you should take a look. And then you go take a look and you're like, oh, snap. Of course I'm interested in a move like that. Okay? Okay, yeah. Crossfire, expand on what you are saying. You're poking fun at something, but I don't get it. And 100% of the time, we have no idea what the hell is really going on. Really? I wouldn't agree with that. And then bank fraud is fun. I don't even know what that means. So, but what I do know is yesterday, we had this marked as a take profit zone. So if it fails to go up further, I'd say, well, that's what we knew. Cool. Oil's working. Great. I could move my stop if I wanted to. I'm in at 75, and we're at on our way to 77 again. Cool. Nice. Lovely. Right? Yeah. Cool. Sweet. Right on. Trying to hold on that daily 5. Yeah. All right. Is there anything else I can help you with? The stock market just opened. Crude oil, the AI says there's a 77% chance that we're on our way to $87.23. It gave this analysis a while ago, though. It's on the 28th at 7. So on the 28th, I got to go back to, let's go back to the 1 hour. On the 28th, my true love gave to me. Was that Sunday? 26 Sunday. Anyways, no, that can't be right. Identified time 128, and it was at 77, but it has an entry at 72 or 73 really. But we were above that. So I guess it was thinking there would be a dip and it didn't get it. Well, it was thinking a dip to 73, 72, 73. So it didn't get that, which is interesting because I would say that that's the weekly bottom. Interesting. So once again, it's a little different than I would have done it, but it's working. But nonetheless, 87.23 is the AI target. So 87.23, that's way up there. 87. That's through the monthly. So see, it's really doing something that is different. 87.23 is about there. Huh. Well, maybe it gives me some strength to hang on. If it is going to go to 73 first, well, I'll get busted out at break even and I can buy it there. But wowzer, huh? But it says it'll take 50 days. Well, again, the way that I would trade this if I was being a trader, you can see I already bought it, okay? But I bought it way down here on the break and the pullback. So now I have to really, let's do it this way. I bought it on right there, okay? The breakout, the pullback, buy. Okay, great. Now I'm at break even. The second part, because that's just strategic, and then I dropped in and that's just tactical. You would trade a day trade like that. Well, it was a day trade in the moment, but strategically, it's a position trade. So the next being a really more of a swing trade first, the swing trade profit is up here. The next level of swing trade profit is here. And the position trade, well, is long, high until July. That's the thing about oil, right? Head high in July. Well, how do I know that? Not the technical analysis AI, but the fundamental analysis AI. Oh, there's so much AI. Oh my God. Well, I mean, I have AI watching the AI, which is actually pretty funny, isn't it? Well, Ravi, I'm based in the United States of America, so I'm going to lean on WTI, but Brent is fine. It's just there's a bit of a spread on it, but the correlation is really tight. So Brent is fine. Okay. Brent is fine. It doesn't matter to me. Remember, the one thing, I only care about one thing. So once I've made my decision on the one thing, I can trade Brent or WTI. It doesn't matter. At that point, I don't even care. I open up my charts and I buy a higher low or I don't buy a higher low. Because I've made the decision already before I even look at Brent, before I even look at WTI or gold or silver. Before I even open the chart, I've already made a decision. And if you've watched the training course, I teach you the way that I taught myself how to trade. youtube.com/Forex.Today. Should work, right? Yeah. So let's go here. I've already taught you. And if you haven't watched it, I think you'll at least find it interesting.
You kind of have to be nuts not to jump in a real
ad. All right. Unad. All right. You go here. This one. Free 90-minute lecture on fundamental analysis. Okay. One of the things I teach you in this presentation is the way I first started trading. And when I first started trading, I did quantitative analysis. And once I spent an hour or an hour and a half doing my statistical analysis of capital flows, I organized all my currency pairs. So I generally just created indices. I didn't know I was doing that, but based on quantitative analysis of overnight capital flows, I created indices for the pound, the euro, the Swissy, the yen, the dollar, the Aussie, the Kiwi, the CAD. And then I did comparative analysis based on relative strength. So unfortunately, I didn't know anything about trend back then. And that's ultimately what made it not work consistently enough. But then I did all this comparative analysis, and I knew the three, let's say even two, the two currency pairs. Remember, I created indices first. Then I did comparative analysis of doing strong versus weak. And then I knew the one or two pairs I wanted to buy, and I knew the one or two pairs I wanted to sell. Do you see? That analysis got me to my one thing. I already knew I was a buyer and a seller, and why. Then, and this is the big thing, guys. This is the fireworks, right? Pay attention to this. Pay attention. Then I would open my chart and do technical analysis. And the technical analysis either confirmed my buy bias or denied my buy bias. Then I'd open other charts and technical analysis would either confirm my sell bias or unconfirm my sell bias. And I still to this day believe that's the right way to trade. Now, my methodology was quantitative, but it was incomplete. I was doing relative strength based on capital flows. but I never knew when it would end. And that's because there was no trend analysis. All right. All right. No trend analysis. So now, then I had to teach myself, well, what creates a trend? So is when I have a trend, the trend is my friend. And then when we run out of trend, the trend is exhausted, then I can either go back to relative strength or being in cash is a position. And so if you want to learn how I did it, I show it to you and it'll show you the strength of it, but also the weakness of it. Okay? Yeah. All right. Hey, did you click the thumbs up button? Was today good? Was it okay? Well, I hope so. Oh, just one more thing. Goodbye.